Mark Newton is the global head of technical strategy at Fundstrat. Why pullback? How big of a pullback, Mark?
Hey, Melissa, great to be here. Look, I think it's going to be minor in scope, but there needs to be some stabilization in the banking sector. That's the bottom line. I think investors are concerned about lack of a coherent message between Powell and Yellen, and obviously the Fed's formal commitment to QT. And we've just seen nearly a $300 billion, raise in the Fed's balance sheet in the last week, and so really we don't know what to make of this. But a lot of this really screams of hysteria. You look at what's happening with Deutsche. This isn't Credit Suisse. These AT1 bonds are a very different picture. And so, in general, I do not view this as being systemic. I think it's really idiosyncratic type issues with the banking system. And, bottom line is we'll see some stabilization in the banks and things will actually be in pretty good shape. And we heard that, cash levels have risen to 5.1 trillion. Investors right now, retail is sitting on more cash than at the height of the pandemic. And so sentiment truly has gotten very, very negative right now. And that's really a big positive during such a seasonally bullish time as we're seeing this year. So I think we'll blow over. I honestly don't see this as too big a deal. But yes, lack of stabilization in financials, certainly a very big part of the S&P that really needs to hold. To your other point that we were saying earlier, look, technology is working phenomenally well. Investors are certainly sniffing out a pivot in the Fed, and that does aid growth at a time when we direly need it. So technology is acting great, and there's no evidence of that rolling over. We see great movement in stocks that comprise a lot of the S&P and the NASDAQ, Apple and Microsoft. Sentiment has gone from negative to now very bearish and could border on fearful in the next week if we don't stabilize, and that's actually a very big positive. And we're in a pre-election year, so nothing can really get accomplished. And honestly, when we see a divided government like this, it tends to be a very big positive for markets. We've seen that time and time again. We're heading into the most bullish month of the entire year seasonally, which is April, right. And sentiment's very negative. So I think all those are a very big positive. I see the extent of the pullback as being 2 to 3% to really 3,800 max by the end of the month.
Yeah, I mean, Apple and Microsoft alone are north of 13% of the S&P 500 right now. So it's, you got those, you got some weighting in the S&P 500. Joe, you got a question?
I do, Mark. Good to see you today. Mike Santoli's done a great job on the network talking about the pattern that currently exists where you have the October low and then you have the retest in March. And if you go back historically, that generally signals that October low was the low in the downtrend. How do you see that, and can you provide some historical context to when you get the October low, March retest? Where does the market go from there?
Well, I just look at sentiment as being as negative as it is, and heading into the third year, typically we see bear markets in second years of a decade, ending when you get to February or March of the third year, and really we're here. And fear is on the rise. We see technology acting great. Industrials, to their credit, have broken out to new multi-year highs in regards to the S&P. Healthcare, is starting to come back. We've seen some great movement in some of the medical device stocks of late. And so, healthcare, obviously the second largest component of the S&P. Healthcare and technology are very important. We need to see some stabilization. If financials can hold in the next week or two, and I think they can, that's going to be
Mark.
Go ahead.
Mark, I just want to stop you for 1 second because I want to ask the question another way, I guess.
Yeah.
What are the months of the calendar year in which the market generally tends to bottom on a historical perspective? Is it October? Is it March?
Well, it is the fall, and typically it bottoms during times of fear. It can be anywhere from August through October, and we've seen that. Great rally that was completely unexpected by investors in January, and we've given some of that back in February. Technology was positive throughout that whole time, and that is also important. So, seasonally, it's important for investors to recognize that. You rally into the spring. Normally, you have a correction in the third quarter, and then you rally towards year end. I think this playbook is happening all over again.